about the future.
Now, let's talk about some of the key risks and challenges they face, because every business has them.
Right.
The elephant in the room, of course, is the RBI's technology embargo.
Yes, that continues to be a major overhang, limiting their ability to grow their credit card business and expand their digital offerings.
And the timeline for lifting the embargo is still unclear.
Right. That uncertainty makes it difficult to plan for the future.
The rising delinquencies in the microfinance sector are also a concern.
Yes, it's a reminder of the risks inherent in lending to this segment, which is particularly vulnerable to economic shocks.
If the economic slowdown materializes, it could put pressure on their asset quality
Right.
in other lending segments as well.
That's a valid concern.
Yeah.
And let's not forget the competitive landscape,
Yeah.
which is constantly evolving.
New players are entering the market, existing players are getting more aggressive,
Right.
and technology is disrupting traditional business models.
So they'll need to stay agile, keep innovating, and maintain their strong customer focus to stay ahead of the game.
Yeah, they've also mentioned the challenge of managing costs in this inflationary environment,
Right.
particularly employee costs, which are a big expense for banks.
And the regulatory environment, as always, is in flux, so they need to stay on top of those changes and comply with all the new rules.
Those are all valid concerns, but Kotak Mahindra Bank has a solid track record of overcoming challenges and delivering results.
I agree. Their experienced leadership team, prudent risk management, and diversified business model should give them the resilience to weather the storm.
Now let's take a closer look at some of the things they're doing to enhance their customer experience and strengthen their competitive position.
They're focusing on creating a seamless, omni-channel experience for their customers.
What does that mean in plain English?
It means making it easy and convenient for customers to interact with the bank through whichever channel they prefer, whether it's online, mobile phone, or in person at a branch.
Right. Customers want choice and convenience.
Exactly. They're also using data analytics to personalize their offerings and anticipate customer needs, providing tailored product recommendations and financial advice.
It's all about understanding the customer better and providing them with solutions that meet their individual needs.
Precisely. Their digital platforms are also evolving, offering more features and functionalities to make it easier for customers to manage their finances on the go.
And they mentioned they're investing in artificial intelligence and machine learning. What's the plan there?
They're using these technologies to automate processes, improve decision-making, and provide more personalized customer service. It's all about leveraging technology to make banking smarter and more efficient.
So they're not just talking about digital transformation, they're actually putting it into practice.
They are, and it's a key differentiator in the competitive landscape.
They're also focusing on strengthening their risk management practices,
Right.
particularly in areas like cybersecurity and data protection, which is crucial in this digital age.
Absolutely.
Customers need to trust that their financial data is safe and secure.
And they're committed to responsible lending, making sure they're providing loans to people who can actually afford to repay them.
That's important both for the bank's financial health and for the well-being of their customers. Their focus on financial inclusion is also noteworthy,
Yes.
as they're making an effort to reach out to underserved segments of the population
Right.
through their microfinance and business correspondent businesses.
Those efforts contribute to the social and economic development of the country.
All of these initiatives and strategies highlight their commitment to building a sustainable and customer-centric business that benefits all stakeholders.
Agreed. They're setting a good example for other banks in India and are helping to shape the future of banking in the country.
Now let's talk about the competitive landscape in which they operate. They're up against a lot of different players, from public and private sector banks to foreign banks and non-banking financial companies.
It's a crowded and competitive market for sure.
So how are they differentiating themselves?
Well, their strong brand reputation, built over decades of responsible banking practices,
Yeah,
is a key asset.
that's something money can't buy. It takes time and consistent effort to build a trusted brand.
They're also leveraging their technological capabilities, their diversified business model, and their experienced leadership team to stay ahead of the curve. They're constantly innovating, introducing new products and services, and expanding their reach to capture a larger share of the market.
So they're not resting on their laurels.
Right.
They're actively looking for ways to grow and evolve.
Their competitive strategy is multifaceted, but it boils down to providing a superior customer experience,
Okay.
offering a wide range of products and services, and maintaining a strong financial position.
Makes sense.
They're also committed to fair and transparent pricing, which is important for building customer trust.
It's a smart strategy,
Yes.
but the competitive landscape is constantly changing.
Right.
So they'll need to stay agile and adaptable to maintain their edge.
Absolutely. They can't afford to become complacent. They need to keep pushing the boundaries of innovation and customer service to remain competitive.
Now let's switch gears and talk about the regulatory environment in which they operate.
The Indian banking sector is highly regulated, with the Reserve Bank of India, or RBI, playing a pivotal role in overseeing the industry.
Right. The RBI's mission is to ensure the stability and soundness of the banking system.
Right.
They set the rules of the game for banks in India.
And those rules cover a wide range of areas,
Yeah.
including capital adequacy, asset quality, risk management, corporate governance, and consumer protection.
Right.
It's their job to protect the interests of depositors and promote a healthy financial system.
So banks have to play by the RBI's rules.
Absolutely. The RBI conducts periodic inspections and audits
Yeah.
to make sure banks are following the rules and identifies any potential areas of concern.
Okay.
They also regularly update the regulations to reflect evolving risks and market conditions.
So it's a dynamic environment.
Yes.
And banks have to be on their toes.
Right.
How is Kotak Mahindra handling all this?
They have a strong track record of regulatory compliance. They've invested heavily in building a robust compliance framework and have a dedicated team of professionals who monitor regulatory changes to ensure they are always on the right side of the rules.
That proactive approach is crucial,
Absolutely.
especially considering the RBI's crackdown on banks that don't comply with their regulations.
Absolutely.
Yep.
Now let's dig into some specific regulatory developments impacting Kotak Mahindra and the Indian banking sector.
Oh, okay.
One key development is the RBI's focus on cybersecurity and data protection.
Yeah, that makes sense. We're seeing more and more cyber attacks and data breaches globally, so it's crucial for banks to protect their customers' financial information.
The RBI has been issuing guidelines and regulations, pushing banks to implement robust cybersecurity measures,
Okay.
such as data encryption, multi-factor authentication, and regular security audits.
And it sounds like Kotak Mahindra is taking these measures seriously.
They've implemented a comprehensive data protection policy and have a dedicated team of cybersecurity professionals monitoring for threats and responding to incidents.
Another key regulatory development is the RBI's focus on financial inclusion. What exactly does that mean?
It means expanding access to financial services for underserved segments of the population,
Okay.
such as low-income individuals, rural communities, and women.
And how is the RBI promoting this?
They're encouraging banks to open branches in underpenetrated areas
Okay.
and offer products and services designed to meet the needs of these underserved segments.
Gotcha.
They've set targets for banks to reach certain financial inclusion milestones.
So it's not just about profits, it's also about social responsibility and making sure everyone has access to the financial system.
Right, and Kotak Mahindra has been actively involved in financial inclusion initiatives, both through their traditional banking operations and their specialized microfinance and business correspondent businesses.
They're also leveraging technology to reach customers in remote areas, offering banking services through mobile phones and other digital channels.
These are all positive steps, and it shows their commitment to the broader goals of financial inclusion in India.
Now, let's turn our attention to their financial performance in more detail.
Okay.
You mentioned some key metrics earlier, but can we dig a little deeper?
Of course, one key metric is their return on assets, or ROA,
Yeah.
which stood at 2.1% for the quarter.
Okay. And remind me what that means and why it's important.
ROA measures how efficiently a company is using its assets to generate profits. A higher ROA suggests a more efficient use of assets.
Gotcha.
And in Kotak Mahindra's case, an ROA of 2.1% is considered healthy.
So they're doing a good job of making their assets work for them.
Right.
What about their return on equity, or ROE?
Their ROE was 12.43%,
Okay.
which indicates they're effectively utilizing shareholder capital to generate profits.
So from an investor's perspective, that's a positive sign.
Yes, it is. Now, another important metric is their net interest margin, or NIM, which came in at a stable 4.93%.
Remind me again what NIM is all about.
The NIM is essentially the difference between the interest income a bank earns on its loans and the interest it pays on deposits. It's a measure of the profitability of their lending operations.
So a higher NIM means they're making more money from lending.
Right.
But isn't it getting tougher for banks to maintain healthy margins these days with rising interest rates and increasing competition?
It is. However, Kotak Mahindra has managed to keep their NIM stable.
Okay.
They've been able to offset the pressure on margins by attracting low-cost deposits,
Right.
like those active money accounts,
Right.
and managing their asset-liability mix effectively.
That's encouraging.
Yes.
They mentioned their cost-to-income ratio improved as well.
Right. It came down to 40.4%, indicating they're becoming more efficient in their operations and controlling costs.
Now let's talk about their capital position, which is always a key factor in assessing a bank's financial health.
Their capital adequacy ratio stood at 22.8%,
Okay.
which is well above the regulatory requirement, indicating they're in a strong financial position and have a buffer to absorb any potential losses.
That's good news for investors,
Yes.
as it shows the bank is well capitalized and can weather any potential storms.
Absolutely. Their asset quality metrics are also solid.
Yep.
Their gross non-performing asset, or GNPA ratio, was 1.5%, and their net NPA ratio was even lower at 0.41%.
Wow.
Reflecting their prudent lending practices and their efforts to recover bad loans.
Those are low numbers.
Yes.
Indicating they're doing a good job of managing their credit risk.
And their provision coverage ratio improved to 73%, which means they're setting aside adequate funds to cover potential loan losses.
That's a sign of responsible risk management.
All of these financial metrics paint a positive picture of Kotak Mahindra Bank's financial health and performance.
They're clearly well managed.
Right.
And their strong financial position should give them the flexibility to navigate the challenging environment and continue to grow their business.
Agreed. They've earned their reputation as one of the best managed banks in India.
Now let's talk about their growth strategy.
They're pursuing both organic and inorganic growth opportunities.
Right, we touched on that earlier.
Yes.
What are they doing to achieve organic growth?
Right.
Which involves expanding their business through their existing operations.
They're investing heavily in technology, both to enhance their customer experience and streamline their operations. They're building out their digital platforms, expanding their mobile banking capabilities, and using data analytics to personalize their offerings.
So technology is at the heart of their growth strategy.
It is. They see it as a key enabler of growth, efficiency, and customer satisfaction.
They're also expanding their branch network.
Yes, particularly in underpenetrated markets where they see opportunities to acquire new customers.
And they're continuing to build a granular retail book, which means they're targeting affluent and younger customers with customized products and services.
It's a smart strategy, as those customer segments represent a significant growth opportunity.
On the wholesale side, they're strengthening their capabilities.
Right.
They're targeting large corporates, mid-market companies, and SMEs with a comprehensive suite of solutions,
Right.
including lending, transaction banking, treasury management, and advisory services.
They want to meet all their needs.
So they're really aiming to be a one-stop shop for businesses of all sizes.
They are, and they're leveraging their extensive network and industry expertise to gain market share.
And they're also expanding their capital markets and asset management businesses.
Those businesses have been performing well, and they see significant growth potential there as India's economy continues to expand and more people seek investment opportunities.
So they've got a pretty comprehensive plan for organic growth. What about inorganic growth, which involves expanding through mergers and acquisitions?
They're open to exploring such opportunities, but they're being very selective.
Okay.
They're only interested in acquisitions that align with their strategic goals, make financial sense, and allow them to enter new markets or expand their product portfolio.
So it's not about growth at any cost.
Right.
It's about strategic growth that creates value for their shareholders.
Exactly.
Now, let's circle back to their ambition to become one of the top 3 private sector banks in India by 2030 in terms of profitability. How realistic is this goal?
It's ambitious, for sure, but they do have a lot going for them.
What are their key strengths that could help them achieve this?
They have a strong brand, a loyal customer base, and a well-diversified business model.
Okay.
They're also technologically savvy and are making smart investments to enhance their digital capabilities.
And they have a proven track record of delivering consistent financial performance.
Right. They're also committed to customer service and are constantly looking for ways to improve the banking experience for their customers.
But they also face challenges, as we've discussed.
Of course, the RBI's technology embargo is a major hurdle.
And the uncertain economic environment, particularly the possibility of an economic slowdown, could create headwinds for growth.
Right.
The competitive landscape is also getting tougher.
Right, but they've navigated challenging environments before, and they've always come out stronger.
Yeah.
I agree. They have a talented and experienced leadership team that has a clear vision for the future. They're also adaptable and have shown a willingness to adjust their strategies as needed.
So while there are definitely risks and challenges, I think they have a solid chance of achieving their goal, but only time will tell.
Well said. Now let's shift gears and talk about it.
You know, one thing that we haven't really gotten into yet, but has been kind of woven throughout this entire earnings call is technology. And it's clearly a major focus for Kotak Mahindra,
Yeah, even with that RBI embargo in place.
even with the embargo.
Yeah, it's fascinating to see how they're not just reacting to the embargo, but proactively using it as an opportunity to refine their technology strategy and build even more robust digital banking platform.
They've mentioned launching new KO and 811 apps, along with Neo and Cherry, and they've been busy digitizing and automating various customer journeys. What does all this tell you about their approach to technology?
I mean, I think it shows that they see technology as a key enabler of their future growth and success. They're not simply trying to comply with regulations, but are using technology to enhance the customer experience, streamline operations, and create new revenue streams.
Right, and that focus on customer experience is crucial in today's competitive market.
Oh, absolutely.
Customers expect convenience, personalization, and seamless interactions across all channels.
Exactly, and Kotak Mahindra seems to understand this well. They're leveraging data analytics to gain deeper insights into customer behavior, allowing them to personalize their offerings and provide more relevant financial advice.
They're also streamlining their digital onboarding process, making it easier for new customers to open accounts and access services.
These are all really smart moves. It shows they're serious about becoming a truly digital-first bank.
But what about the RBI embargo? Isn't that a major obstacle to their digital ambitions?
It definitely presents challenges, especially in those areas like credit card growth and the expansion of their 811 digital banking platform. But it doesn't seem like they're letting it completely derail their plans.
The CEO expressed confidence in their ongoing dialogue with the RBI and highlighted the progress they've made in addressing those concerns.
Sounds like they're working diligently to resolve the issues that led to the embargo and are committed to meeting the RBI's requirements. In the meantime, they're using this time to refine their technology strategy and build a more resilient and secure digital infrastructure.
So they're turning a challenge into an opportunity. That's pretty impressive.
Yeah, it is. It speaks to their adaptability and long-term vision.
Now let's talk about another key aspect of their strategy, customer acquisition and retention. The banking industry is fiercely competitive. So how are they planning to win in this game?
They're taking a multifaceted approach, focusing on both organic and inorganic growth. They're leveraging technology to enhance the customer experience, as we've discussed, but also expanding their branch network and offering a wider range of products and services to cater to different customer segments.
They specifically mentioned targeting affluent and younger customers.
Right, which makes sense given their growth potential.
Yeah, exactly. And they're not just focusing on acquiring new customers. They're also working hard to deepen relationships with their existing customer base and build loyalty.
Right, which is crucial in today's environment,
Yeah.
where customers have so many choices.
They need to make sure that their customers feel valued and appreciated.
Exactly, and they're doing that through personalized services, tailored product recommendations, and proactive communication. They're also building a strong community around their brand through social media and other channels.
It sounds like they're pulling out all the stops to create a customer-centric culture.
They are, and that's going to be essential for their success in the long run.
Now, before we wrap up, I want to go back to something you said earlier about turning challenges into opportunities. And we've kind of seen this theme throughout their earnings call, from their response to the RBI embargo to their approach to managing risk in a slowing economy. What do you think this says about their overall mindset and culture?
I think it says a lot about their resilience, their adaptability, and their determination to succeed. They're not afraid of challenges. They see them as opportunities to learn and grow. They're not just reacting to events. They're actively shaping their future.
It's a pretty inspiring message. Makes me even more confident in their ability to achieve those ambitious goals.
I agree. They're definitely a bank to watch in the coming years.
So what does all of this mean for you? We've spent the last few minutes, or actually the last, half hour or so, diving deep